You're often confused about where to enter the market, or you don't know where to place your entry or where to get your entry confirmation from. I'm going to be showing you 3 significant places where you can be looking forward to for entry confirmation. Now, the first thing you need to know is the trend of your market. You need to learn market structure. You need to know what market structure is. You need to know the current trend that we have. So this is an uptrend. So the first place you should be looking out for entry or to look out for your entry confirmation is a fair value gap area. Now, fair value gap are often created when we have significant moves in the market. When we have impulsive move in the market creates gaps in those candles. That is what we mean by fair value gap. Now, fair value gap are often created in 3 candles. So let's see what fair value gap is. An example of fair value gap is this. We have 1, 2, 3 impulsive candles. We have 3 impulsive candles. So we'll pick the wick of the first candle. You can see that this is the wick of the first candle. We mark it out. So this is the wick. Then we pick the wick of the third candle. So this is the wick of the third candle. And you can see that we have gap. There is a space that has been left unfilled. Now, when market comes back to this kind of area, you can be looking forward for your entry confirmation because there is an impulsive move. It shows that something significant happened at this particular area. Let me show you another fair value gap. See what we had here. We had 1, 2, 3 candles, and we have the wick of the first candle, then the wick of the third candle. So this is another fair value gap, and you can see that we had great impulse to the upside. It means there was significant move to the upside. Now, trading fair value gap has to do with your higher time frame. Where is the liquidity, or where is the possible liquidity for markets to come back to? You can see that this is fair value gap. It is a draw of liquidity, right? But we have another fair value gap below. We have another fair value gap below, which means that market can use any of these lows for liquidity. And if you are familiar with trend line, see what we have here. We have trend line here. Market created a nice trend line here, and we have fair value gap below. But here, there was no significant liquidity market could probably come back to take. When I talk about liquidity, especially for beginner, we are talking about money. We are talking about where market could come back to and trick buyers or sellers out of the market. Okay, fair value gap thrives with liquidity. You need to know that fair value gap thrives with liquidity. So this is a trend line liquidity. There is fair value gap below, there is fair value gap above. Now, this is more valid than the one that is above here because we already have trend line liquidity backing this particular one up, backing this fair value gap below. As the first entry where you can start getting your entry confirmation from. Then the second one I would love to talk about is the sponsored candle. The sponsored candle. Now, when we talk about sponsored candle, when we have a break of structure to the upside, let me make an example, either to the upside or to the downside. We are talking about origin of that break of structure. So let me get an example to possibly use. So we have a break of structure and the origin of this particular one, we have a break of structure. Okay, this is where we have the change of character, a break of structure. Now, after this break of structure, you can see that this particular one has been tested. So let's work on this. So when we talk about sponsored candle, it's just the last down candle before an up move or the last up candle before a down move. So this is an up move. This is a movement to the upside. So where is the last down candle? This is the last down candle. This particular black candle is our down candle, our last down candle before this particular up move. So this is our sponsored candle. This is a sponsored candle over here. And backing it up, we have this impulse to the upside. There is an impulse to the upside to back this particular sponsored candle up. Now, when we talk about characteristics of sponsored candle, we are talking about immediately it is created, we should have an impulsive move. It should take liquidity. And if you see this particular candle, it took out this previous low. This particular candle took out this previous low. we took out this previous low. So making this particular sponsored candle a valid sponsored candle. So in cases like this, you are waiting for market to come back to areas like this and give you a good confirmation to tell you that we are going to be moving to the upside before you jump into the market. So it is also a valid zone. Now, sponsored candle can be determined based on the range. What I mean by that is that when you have a break of structure, to the upside, where is the range? From this low to this high is our current range, right? So you can determine your sponsored candle based on this range. You can determine it based on this particular range, and you can always see it even on the lower time frame. So when you have a break of structure to the upside, just look for, the range. When we have a break of structure, where is the low? This was the last low, and this was where we had a break of structure. So this is our range. We can look out for our sponsored candle for this range. Then the third one is our breaker. Yes, that is our breaker block. There are times when markets will give us a break of structure to the upside. Markets would give us a break of structure to the upside, and it would not have strength to come back to the sponsored candles. So markets break it impulsively. In some cases, you will not see market return back to sponsored candle immediately. So in some cases, you will see market come back to breaker block. So how do you recognize your breaker block? Breaker block for me, because we have different way of interpreting breaker block, but breaker block for me is a failed sponsored candle. It is a failed sponsored candle. Now, what is a failed sponsored candle? So where is the sponsored candle around here that failed? So you can see this movement to the downside, So where is the sponsored candle we would have picked if we wanted to continue selling? So this is the sponsored candle. I would have picked this particular candle. I would have picked this particular candle in case we want to sell. This would have been my what? My sponsored candle. So it is a failed sponsored candle to me. So we have a break of structure to the upside already. So it's not possible for us to, continue to the downside again. So particular one is my failed sponsored candle. This is just mark it out as my breaker block. Then I'm going to come here and mark out my sponsored candle also. So anyone the market wants to use, it will use it. So it might be this one. My market might come back to the sponsored candle. So you can see that market actually used this breaker to continue to the upside, because currently it does not have the strength to come back to the sponsored candle. And that is just it. Those are the three significant areas where you can look out for your entry confirmation and get your entry. You also need to learn what your entry confirmation is, and it also depends on your strategy. It cannot stand alone. It is dependent on some other topics, guys, in my next video.